Hey guys, this is going to be another look at ZB. In the previous video, I looked at all of the different degrees of trend on the different time frames. I'm not going to do that again. In this video, I want to focus mostly on the hourly chart and sort of the bull and bear case going up into the Fed this week. Uh, I will observe, however, that we were looking at this measured move as resistance, and it's held, and I think it's traded. It's at 159 as a 618 retracement, and the weekly close was at 159. They did not get a weekly close above that resistance level, and the weekly close is what matters most. And in fact, on the daily chart, there is not even a daily close above that level. So, and we wicked into this stealth resistance zone that I talked about. So I think that this setup has held and it's traded. Sort of the concern now for shorts like me is that we're sort of lingering and loitering in the long from lows here. We on the daily chart we've reconnected with the Bollinger Band center line, and going into a potential catalyst like next week, you don't want to see that as a short. You want to see us trading off of resistance going into a catalyst and not trading off of support. So we'll talk more about that. But on the hourly chart, so in the previous video, I was looking at the continuous contract and wondering if the structure then was some sort of bull nest, right? We had a 1 and a 2 and a 1 and a 2, and then arguably another 1 and a 2. But since then, we've had this deep retracement that I think has negated that. And so the question is there a bullish interpretation of everything in this channel right here? And I've been looking at the June contract, the June expiration in isolation to see if it gives a cleaner read on anything. And so, here's what I can come up with. Taking, let's say, the bullish case first. So if you're bullish, I think you want to see this as a one up and then some sort of expanded flat correction. A 3 3 5. So that would be a 1, that would be a 2, this would be a 3, punching out the channel as ZB is wont to do, and then a 4. But here's the issue, is that this dashed line is the top of wave 1, and we have a couple of days of overlap right there. Ideally, wave 4 would have come across the channel, and let me draw that better. It would have come across the channel and touched it and traded this next measured move to its target up here, and then that wave 5 would have punched above the channel again, as ZB is wont to do. So that would have been a 4 and a 5, and that would have been a fairly traditional looking impulse wave. But it didn't do that, and so I think the best bull case now is that, yeah, that's a 4, and 1 2 3 4 1 2 3 4 5 of 5, that's a clean 5 wave move. I think the best bull case is that this is a 5 3 5 3 5 leading diagonal where the 1 and the 4 overlap. Sort of the issue with that, if I pull up this photo, is that your textbook leading diagonal tends to look more like a rising wedge, and what we have is a perfect channel. So can a leading diagonal look like a channel and not a wedge? I don't know. It's not a textbook impulse wave, and it's not a textbook leading diagonal. But if you're bullish, that would have to be the 1 up, and then we've since had a 2 down, and we're sitting on the long from lows going into a potential catalyst that will then launch in a third wave up that will wreck shorts. I think that's the bull case. Um, we've seen this sort of squidgy overlap scenario before on ZB. I remembered on the daily time frame, it was, we made this intermediate bottom, and then we had this first move up over here. And, so there was a 1 up, a 2 down, maybe a 3 up, and this 4 right here overlapped with the top of this wave 1 right here. And ultimately, this was all corrective. Right? In hindsight, I don't think this was any sort of impulse wave, and that it was trying too hard to make a square peg fit in a round hole. So maybe the lesson there was that if you have to try this hard to find a bullish pattern, maybe it's not really bullish. But regardless, there it is. That's the best bullish scenario I can come up with on this time frame going into FOMC. The bearish scenario is that this was a WXY correction, and so this was a 5 3 5, an ABC. This C wave is 618 of this A wave. I measured it out of curiosity. And then there's a 3 wave, and then there's an A, B, C, and the pattern repeats. This C wave is a 618 of this A wave. So it's a 535X, 535 correction. So in the bear case, this was a 1 down over here. This was a 2 up. And we're in a third wave down, and we've arguably completed 1 2 3 4 5, the first wave of that wave 3 down. And so this week, what bears would want to see ideally is we're not trading the long from lows going into the catalyst. Ideally, we're trading some sort of retracement level up here, and arguably we could even come back in, or on the daily chart, come back into this sell zone again, 157 to 159. So I'll be watching that like a hawk this week. And so, there would be some sort of 2, and then maybe in the Asian session of this week, we get a third wave here. It would be a third wave on not just the hourly chart, but also the daily chart and even the weekly chart. It would be a strong trending third wave, a major sell that would wreck longs, anyone who bought down here. Actually, I suppose that wave 2 could maybe back test that channel. I don't know. That's irrelevant, really. So a 2 and then a 3. And so this, this retracement, if this goes up this week, is what I'll be watching like a hawk. And what's interesting about this WXY pattern is I'm on the June contract. I'm always trying to integrate these fib setups, these measured move retracements and extensions, with these patterns. And what this pattern seems to be is there's an A and a B and then a C that doesn't hit its target. And then we have it again with this one, where we have an A, a B that dips in and then retests, and then a C that doesn't hit its target. They just make a marginal new high. And then joining them, you can argue that the X wave came back and dipped in and it traded from a 618 retracement to a 618 target and a little beyond. So it's the X wave that leads into this this next, into this next A wave up. Uh, but the root of the pattern, again, is two measured moves. Let me put that back up. That fail to hit their targets here and then up here. Is that everything I want to say on the hourly charts? I think so. So like I said, I think bears have a cleaner pattern going into this week. And if this is going to be a third wave down, it should be a doozy that should take us, across the median of this weekly log channel and then down here somewhere. So it will be interesting. I hope that helped. Thanks, guys.